Hi everyone, welcome to another Weekly Forex Forecast for the week ending July 3rd, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the Pound USD, the dollar versus the yen, the US dollar versus the Canadian dollar, and gold or XAUUSD. I'm going to show you why the dollar yen only has a few more months before a multi-year breakout that could take the pair thousands of pips higher or lower. We're also going to take a look at gold, which has been performing incredibly well, and what could happen if buyers do take out that 1800 level over the coming days and weeks. All right, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. Alright, so first we have the EURUSD, and as you can see, the pair did break below that 112.30 area last week, but things right now are getting really choppy. So if we look at the daily time frame, or just about any time frame here, you can see where we just have a lot of this sideways price action, a lot of back and forth. So 112.30 is something that I've talked about now for the last week, where you can see that it served as support back here, served as resistance last Friday, support last week, and then resistance again on Friday. But all of this indecision through here just tells me that the euro is trying to figure out where it wants to go. Furthermore, this is really just all consolidation following this rally back here. So if we look at the 4-hour time frame, you can see that we still have a falling wedge that's intact. This is the one that I talked about back here when the EURUSD was coming down to test that area around 111.70. Now we did have a breakout here, but there was absolutely no follow through. So we've had a retest of the top of that wedge, and the EURUSD as of Friday was unable to break back above 112.30. So all of this just points to indecision for me. This is not something I would trade. Perhaps we have something develop here more like a channel based on this recent swing high up here. If we drag this lower level down, you can see where we could have a descending channel that could act as a bull flag following this run up. All right, so this is all just stuff that I'm going to keep an eye on. I'll see how this progresses over the next few days, but as of right now, there's really not a structure here that I would want to trade from either a long or short side. Next up, we have the British pound, and much like the euro, we have a lot of indecision. So I've removed that channel that I've been talking about now for several weeks because the pair just got way too choppy around this area. So if you'll remember, this was the big liquidation event back here, and we then had this strong rally back above the 122 area. But since that time, we've had a lot of back and forth. There have been some nice swings here, but this, in my opinion, is all really just consolidation. So what I would look for now is to see if this turns into an ascending channel. So this bottom portion would come in around that 122.40 level that I talked about last week. So this area through here around 122.40 should serve as support, while resistance, key resistance, is somewhere up there around 125. But just like the euro, this is not something that I would trade. There is just not enough momentum here. There's not enough asymmetry for me to be able to either buy or short the pound. Now, if we do see a close below that 122.40 area, that could present an opportunity for a move down into 120. Alternatively, bullish price action such as a pin bar from 122.40 could send the pound higher back toward 125. But just be really careful with this kind of market since we don't have any clear momentum here. And again, this is all really just consolidation after this liquidation event back in March, followed by that subsequent rally. The dollar yen is still holding within this multi-year wedge pattern. I've been talking about this now for the last couple of months, ever since we had this volatility back here in March. So if you'll notice, the bottom of this wedge extends from some of these 2013 lows, and the upper portion extends from the 2015 high. And I've been saying for a while now that this wedge on the monthly time frame it's going to take a monthly close either above or below this pattern in order for the dollar yen to break out. And this pattern is not being respected on the daily or even weekly time frame. If we look at either of those, you can see where things start to get really choppy. So on the weekly time frame, notice all this volatility back here where we had a weekly close above it, we then broke back below it. We then broke below it and back above it. And you can just see where we've had this choppy price action through here. But if we look at the monthly time frame, and this is key, the dollar yen has not closed a month above or below this area. Furthermore, all that choppy price action I just showed you, look at these monthly highs. Notice how they touched right off of this area. Notice this one here from last month. And guess what? June, just last week, touched right off of the bottom of that wedge again. So this is no coincidence. This wedge pattern is what is driving the price action for the dollar yen. And you can also notice that we're getting down to the very last portion of this wedge. In fact, the terminality of this pattern suggests that the dollar yen has to break out by October of this year at the latest, because where these two patterns come together is somewhere around October, November. So there is absolutely no way that the dollar yen can continue doing this through the end of 2020. Over the next few months, we're either going to get a monthly close above this wedge pattern to suggest a move higher, or we're going to get a close below it, which would suggest a move lower. So I'll be sure to talk about key levels once we do get that confirmed break. As for which direction I favor, I'm keeping an open mind here. This could go either way. I've maintained for a while now that this looked like a continuation pattern following this rally back here. So we had the rally, consolidation, and a continuation. But as of right now, as of this video, really this could go either way. And in this type of market with everything going on, it truly can go either way. So you really have to keep an open mind here with everything going on in the markets. As for what's going to happen in the short term, I'm not even going to get into the daily time frame simply because it is way too messy. So I think in this case, it's best to really just pay attention to this pattern on the monthly time frame and see what comes of it. So on June 12th, I wrote about the dollar CAD, and I said how this single day rally back above this key level means that the bottom portion of this channel could start to serve as support. So if you'll notice back here, we have these highs and we also have these two lows. So this descending channel broke down back here on this candle, and it then broke back above it after it closed that gap that sent the dollar CAD on this massive rally. So as you can see, the dollar CAD did hold above that area over the last couple of weeks. And furthermore, on Friday, we got a retest of 137 or just above. So notice how 137 served as a pivot back here. And then notice how this low right before this breakdown bounced right off of 137, call it 137.13. So this level right here is going to be critical for the dollar CAD to break back above in the coming week to expose 138.60. Now, as I wrote on June 12th, it's going to take a close above that 138.60 area in order to send the dollar CAD even higher. And in my opinion, if we do see a break of that 138.60 area, we could see a move as high as 143.30. So this up here around 138.60 is going to be the trigger for a breakout. All right, so again, all of this through here, just like other pairs that we've talked about already, is really just consolidation, but we need to see a close above that 137.10 area in order to expose 138.60. Alternatively, if we see bearish price action from 137.10 in the coming weeks, such as a bearish pin bar, that could send the dollar CAD lower. But all in all, things are starting to look constructive for the dollar CAD, especially if it can take out 137.10 in the coming week. Gold, or XAUUSD in this case, broke out of its range last week. So I've been talking about this area between 1680 and also that 1750 area for several weeks. So ever since gold closed back above 1680 back here, this area has served as support on a daily closing basis. Furthermore, that 1740/50 area served as resistance on a daily closing basis. This Monday close, this daily close above it, was the first daily close above 1750, which meant that that area becomes support. If you want to be more specific, 1747 is the exact level that I talked about recently. All right, so if we zoom in here, you can see where after breaking above it, 1747 served as support and attracted buyers. We then got a rotation lower on Friday, and we also got a bullish pin bar to end the week. Okay, so right now things look constructive for gold as long as it can stay above that 1750 area. Now, as for support for the week ahead, one thing you could do is look at the 50% retracement or thereabouts for Friday's bullish pin bar. So I wouldn't be surprised to see a bit of weakness to start the week and perhaps a pullback down here into the 1755, maybe 1760 area before we get that rotation higher. Now, 1800 is going to be critical resistance, and that's based on a lot of the price action from gold's all-time high. So if we go back here and look at the price action between 2011 and 2012, notice how 1800 served as resistance on several occasions after it broke back above it. So 1800 served as support through here, gold broke down below it, 1800 became resistance. Now, one thing I've been saying for a while now too is if we do see a close above 1800 in the coming weeks, there is not much to prevent a run at gold's all-time highs right around $1,900. But I would also be surprised to see gold take out 1800 on the first attempt. I would expect the market to fail at taking out 1800 at least on the first go. All right, we could see some consolidation here before we see that next breakout, just like we got back here. But in my opinion, it's going to take at least a daily close above 1800 to expose gold's all-time high. So in summary, as long as 1750 holds, I like the idea of a move into 1800. Alternatively, if we see gold close back below that 1747 area, that would signal weakness and also expose 1680 support. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.